It has been 7 years since the rollout of the goods and services tax, and according to a Deloitte survey, among corporate India, there is growing confidence in the GST regime. For its third edition, Deloitte surveyed 760 corporate executives across 6 sectors. 84% of respondents reported a positive perception of GST. This has risen from 59% in 2022 and 72% in 2023. So what is the biggest benefit of GST? 73% of respondents cited competitive pricing as the biggest business operational benefit. According to the survey, the industry is also calling for several challenges to be addressed. For instance, 88% of respondents sought continued simplification, technology integration, and capacity building. 91% of respondents called for enhancing dispute resolution and endorsed the extension of audit timelines. 48% of those polled by Deloitte called for rationalization of GST rates and addressing the issues surrounding the GST's inverted duty structure. Joining me now to discuss the survey is Mahesh, Jaising and DP Nagendra Kumar of Deloitte. A very warm welcome, sir. Let me begin by asking, what is it that the industry has actually hailed, and what are the key challenges that they now want the government to address? Let me begin by asking you, DP Nagendra Kumar. You have been in the thick and thin of the government. What do you think is the scope for improvement that government can work immediately?
Yeah, thank you, Timsy. The GST survey at 7, the third edition in a consecutive manner, has clearly brought out the positive sentiment on the implementation of GST and the continuing efforts made by the government in making the compliance easy and simple. The positive sentiments, as you rightly said, from 72 to 84% is across the section, whether it is large, medium or small industries. And that clearly indicates that the efforts made by the GST Council in timely issue of clarifications and robust adoption of tax technology, and also I think providing for a continuous engagement for the stakeholders. I think these are the key factors, in my opinion, has contributed to this type of positive sentiment among the participants of the survey.
Mahesh, coming to you.
Yes.
When we talk about the positive sentiments that he has highlighted, still there are challenges. The survey says that there are certain challenges that the industry is still facing, and that is what the government should actually now look at according to the industry. What are these challenges?
Well, I think the challenges are in 2 buckets. One in terms of the operational challenges, and the other is kind of forward-looking suggestions. But if I stay focused on the challenges that the industry is experiencing, it is around the audits and multiple, duplication of audits. We have in the last few months seen some clarifications, whether on the investigation side and the audit side. But let's not forget, it's the current year is the first final sort of deadline for the first year's audit. So it was expected that this will increase. So industry is expecting that more clarity and standard operating procedures be issued, simplification around the registration side. Things around pre-deposits are pretty high. So these are 4-5 areas that have come out on operational aspects, Timsy.
The survey also talks about rate rationalization. That has been a much talked about development. There was a talk that over the years we'll now slip to a 3-tier structure instead of the current 4-tier structure. Rate rationalization, lots of hopes from the industry. What is it that the government can do according to you?
Yeah, Timsy, the GOM constituted by the GST Council had submitted an interim report, consequent to which some changes were made in the past. You may recollect in the 47th GST Council meeting, a couple of issues related to the inverted duty structure was addressed. The new government will have to look into reconstitution of the GST Council, consequent to some changes happening in the constituting memberships. And I'm sure, I think it is high on the agenda of the government to look at how do we bring the rate rationalization. A couple of issues here we need to keep it in mind. Currently 65% of the revenue is coming from the 18% bracket. The 28% bracket contributes less than 12%, and the 5% bracket also brings the rest of it. So any rate rationalization, what you suggested about the 3-tier structure, will have to keep in mind the current revenue level has to be maintained. At the same time, how do we bring in the merger of those 4 slabs into 3 slabs? is an exercise. I'm sure I think the Fitment Committee is examining it. And as soon as the GOM is constituted, one can expect reasonably that deliberations will start.
Apart from rate rationalization, what is it that the industry wants the government immediately? Top
Correct.
asks.
Yeah, the top 4 asks with percentages, because the survey tells a story. 88% want ITC credit restrictions removed, particularly on the commercial construction where there's monetization and GST is charged, but then the GST credit is restricted. So that's the topmost ask. Second is about 77% asking for unlocking of working capital, saying that whether you can move CGST credit from one state to another, whether you can have certain reverse charge paid through credits. These are some subset specific suggestions and call-outs, but that was the second largest ask. Third is 70% of our respondents have said exports should be further liberalized on the rules for taxation. So the simple rule is if you're providing a service to an overseas entity, it's 0 rated. But the implementation, there are certain gaps and companies are experiencing demands on exports. And the last but not least is about inverted duty structure, particularly for Make in India related, or for companies selling a lower rate of product and buying services at 18% or capital goods at 18%. They hope to get that addressed. And that's about 68% of the respondents asking for inverted duty structure, Timsy.
Staying with you, Mahesh, as you said, these are the top 4 asks. We have been seeing that inverted duty structure has been slowly and steadily getting corrected by the government.
That's true.
Through the GST Council agenda items. We are seeing a lot of circulars coming in. Do you think simplification of law, because when I was going through the survey, that is also something that the industry now wants, and that is going to be the road ahead of the government as well? Government has been saying simplification, easing of compliance. What is the comment or the view that you're getting from your people whom you've surveyed?
Yeah, so 52% participants gave a thumbs up for the clarifications issued, and 48% welcomed the open environment for stakeholder consultation. Not only that, 96% have said we will welcome even circulars in the future. So there are 2 ways to look at it. Why are there circulars? Why is there a need for circulars? Does it mean the framework needs to be corrected in some aspects? Or do we look at it that with the law being 7 years old and audits and authorities also taking an interpretation and a pragmatic clarification coming out? I look at it in the latter bucket, and I think that enhanced circulars will indeed help us going forward. So the theme, particularly what you see in the last 1 year between our last survey and now, most of the clarifications have in fact been pro-industry. If I were to say, it's really not pro, it is a neutral balance and addressing potential litigation being taken care. I, for one, am looking forward to the next council meeting and few other developments around the 7th anniversary, because there has been a gap of 8 months of the last council meeting, and industry from the survey is indeed expecting continued clarification, Timsy.
Coming to you, DP Nagendra sir, how do you think that should be the 2 areas for the future of GST, which industry will expect? And yes, from the upcoming council, what is the immediate demand that you think the council will address?
I think there are a number of issues which the industry has placed before the government insofar as interpreting the law provisions are concerned. I'm sure, I think some of the things which the industry is eagerly looking at is with regard to the deemed supply of services between the related parties. You may recollect that insofar as the domestic transactions happening between the distinct persons, the government had come up with a clarification in August 2023. I think the industry ask is that if it is revenue neutral and it is eligible for input tax credit at the recipient side, even the cross-border transactions should also get the same treatment. That's one big expectations. The second thing basically, Timsy, is the larger ask what Mahesh has mentioned about how do we ensure a seamless flow of the input tax credit in the GST, which otherwise remains as a cost to the business. Ideally, GST should be a business neutral tax. So those blocked credits and restrictions are becoming a cost to the business. The industry will definitely look at some amelioration on that part. To start with, I think some of those kiosks could also be expected to be resolved soon. Yeah.
Coming back to you, Mahesh,
Yes.
as you mentioned, council is all set to meet. We hear from sources that there is a proposal to include Section 11A, which is similar to what was there earlier as Section 11C, which could give a breather on the retrospective demands. What do you think? Is that a big boon that is coming for the industry, which sectors could be impacted?
Well, I don't know the details of a proposed provision, but if you look at, there are 2-3 precedents, whether there was a case of an ice cream case where there were 2 rates and the government took a very pragmatic view to clarify that whatever was inadvertently charged, and going forward you have clarity. So in that form and shape, they already implemented 11C. But yes, there are some interpretation issues. And again, if you see the circular that was referred to earlier on August 23, there was large demands in play, and that didn't come in the way of a clarification that gave a relief right from 2017. So I do expect similar clarifications. And if there is an enabling provision, nothing like it, where because there are some parts that just cannot be clarified, and there are industry practices. 11C that you talk about in service tax is an old provision where it accepted that where there's an industry practice, then you accept it regardless and then make a course correction going forward. I must call out on that, even the instruction that was issued in February for investigations specifically says where there is an investigation on a matter that has an industry practice, consult the policy wing, be a little more, take a overall view. So from different things that have already been done, I won't be surprised if something like that comes. And needless to say, that will only give abundant relief to companies, because one call out has been dispute resolution is an area of concern.
Your last views from you, DP Nagendra Kumar. How do you assess 11A coming up in the council? Which sectors are likely to get benefit according to you?
I think I would consider, if at all, if this provision, what you have suggested, is going to come, it would be an enabling provision for the GST Council to look into specific issues and provide relief through this enablement. Which sectors will get benefited, one has to wait and watch, but certainly I think you are aware that there has been investigation in key sectors. There are possible views of interpretation. This provision which existed in the central excise law was very seldom used at that point of time with regard to assessment practices. But now that we have in the GST Council being the apex body which takes call with regard to the rates and exemptions and thresholds and interpretation of the law, I think this enabling provision could help in giving relief to the industry, provided there is a recommendation from the GST Council.
So those are the key highlights of the Deloitte GST survey. Mahesh, Jaising and DP Nagendra Kumar, many thanks for joining us here. News continues at CNBC-TV18.